Okay, well, the stock on our radar right now is ITD Cementation. It reported a decent set of earnings for the first quarter as the company recorded growth in their revenues, EBITDA and their net profits. However, the company's margins contracted on a consolidated basis. Prasad Patwardhan, who is the CFO of ITD Cementation, joins us now to talk about that. Mr. Patwardhan, good afternoon and thanks for joining in. I want to start by asking you about the outlook on the business. How is the demand situation currently and what kind of visibility do you have in terms of orders?
Good afternoon, Sonia, and thank you for having me on your show. The outlook and visibility for our business appears to be pretty good. We received a good lot of orders in the previous financial year, 7,700 crores. And this year, in the first quarter itself, our order booking has been in excess of 6,000 crores. So our order book as of today is in excess of 20,000 crores, which gives us a very good revenue visibility for the next 3-4 years at least. And the good part is, with the government's focus on infrastructure development, we are seeing a lot of projects coming up for tendering and bidding. So overall, the outlook seems to be pretty good. And with commodity prices also cooling off now, I think we should be in for a good time for the infrastructure sector in this year and going forward.
So you said, you said your order book is in excess of 20,000 crores at the moment, but none of that hasn't actually reflected in your earnings, right? I mean, I was looking at it on a consolidated basis, your revenues are actually down by 6%. Is it because this was a lean quarter? When do you expect the orders to reflect? And what is the expectation on revenue growth by the end of the year?
Typically, the June and September quarters are a bit lean because of the monsoons. And, our order book has grown. Significant orders that we have won have been in this quarter, that is the quarter ending June 22 and in the previous quarter. So these orders, Chennai Metro orders and the Ganga Expressway road project that we were awarded, those have not really, contributing to our top line so far. In a big way. So we expect these projects to pick up steam, the execution to pick up maybe from Q3 or Q4 onwards. And that is why, the outlook, the growth, revenue, visibility and the growth for this year, we are maintaining as of now at about 25%. The growth as compared to the previous year, we expect about 25% this year.
All right, so you're expecting around 25% growth to be maintained for FY23, or that's your guidance which you're maintaining at this point. I just wanted to understand that the incremental orders, where exactly are you seeing maximum of it coming from? Government, PSUs, private? And private I ask because it gives an indication on whether or not private corporate capex is actually picking up. So where exactly is the incremental order inflow coming from?
Well, we have seen a mix of orders from the private sector as well as from the government. So a couple of large orders that we won earlier this year were from Chennai Metro, underground metro projects worth about 4,000 crores. Last month or a couple of months back, we received a very large road order from Adani. So that is, as far as we are concerned, that is a private sector order. It's a greenfield road project that has been awarded to us, which is part of the Ganga Expressway. So we are seeing traction in both, but typically in the Indian context, infra is, the more focus is from the government. So we expect a lot more orders to come up in, whether it is metro or marine projects, or even expressway projects to come in from the government spending.
Okay. Can you give us an update on these two orders, the Bangalore Metro project as well as the Adani project that you just mentioned?
Well, the Bangalore Metro underground project was awarded to us about 2.5 years back, or maybe 2 years back. We started the underground tunneling on that project about 14-15 months back, and that project is progressing very well. It's going on as per schedule. The Ganga Expressway project was just awarded to us just a couple of months back. So the preliminary work has just commenced. And that is why I mentioned, that the real execution will pick up from Q3 or Q4 onwards. And that is when we'll see these new orders, begin to contribute to our top line and our margins.
Okay. Can you help us with what the debt on the books is at the moment? And has there been any change? Because as of FY22, your debt was around 515 crores. It's gone up, bit by bit over the last couple of years. What is it right now? And any plans to bring it down?
Sonia, the gross debt level has not changed. Gross debt level continues to be in the range of 500 crores. What happened is in the previous quarter, we received a lot of payments from our customers, especially towards the end of the quarter. So we were sitting on a large cash balance as of March end, as of March 22. And that money, a lot of that money has been deployed now in our project execution. So while the gross debt level remains unchanged, it is the net debt that has gone up. And our endeavor is to, keep a lean balance sheet and not increase the leverage significantly. But given the new orders that we have now received, we need to spend some money on mobilization, and we'll use a judicious mix of, external debt as well as customer advances to fund the additional requirements.
You did manage to improve your margins on a Q-on-Q basis, 8% or 8.2% versus 7.2%. So there was a 100 basis points rise. What can you guide for? Because it's still lower than, say, what you did same time last year, which is closer to 10%. What are the margins that you're executing on current orders, and what would your blended margins be?
We expect our margins to start improving from Q3 or Q4 onwards. There are two things. There were some legacy orders that we have in our order book, which are nearing completion, and we were not booking any profits on those projects. In fact, in the earlier years, we have booked some losses on those projects. So those projects should be out of our order book in the current year. And as the commodity prices start cooling off further, we expect our margins to improve from Q3 onwards this year.
Okay, all right. You were talking about the Bangalore Metro a while back. Can you tell us just one more question on that? When will it start contributing to your revenue stream?
Bangalore Metro is already contributing to our revenue stream. Okay. There were 2 orders from Chennai Metro that we received in January, and those are still not contributing to our margins. They will start contributing towards the end of this year. And the road project, obviously, we just got it a couple of months back, so it is not contributing to either our revenue or our margins as of now.